this week, you said?
Yeah, I like MD to do a little run up this week, looking at the chart.
Okay, okay.
You better bless me this week, bro. That's all I'm saying.
All right, let's do the rundown. Let's do the rundown. We're going to do the charting session today. I want to run off some of my long-term holds and call-outs that I put out in the community that we rocking with right now. We killing the game with some Microsoft. Microsoft is up. Apple up, as usual. Those two have been holding it down forever. Then we got IIPR, my baby IIPR at 130. Beautiful.
Shout out to Bitcoin.
Yeah, right. GVO.
Right,
We got GVO 164%. $2 sitting at $2 right now. Come on, G. What I told you, I said once you break above those levels, $2 is coming, boy. I said I'll jump on that train with you any day.
Yeah, I think it's going to run up to $5 pretty easily for the year over, though. I think so.
I think so too, bro. That's what I'm holding it. I'm thinking about. I'm just trying to consider. Damn, where do I want a dollar cost average in that for sure? And I'm gonna pull up these levels right now. And if we break above 231, I think that's gonna be the level I dollar cost average in that. 231 is a level going back to the upside. If you go all the way back on their monthly chart, if you go all the way back to November 2022, you're going to see $2.31 as a level. And right there, if we could break above that, look at that gap up to 291. If we break above 231, I'm dollar cost averaging into GVO. People, you don't only dollar cost average in the losing positions. You dollar cost average into your winning positions as well. It's funny how easily people and how unscared people are to dollar cost average into a losing position. But when they have a position that's winning, they're even more scared. They have so much fear to dollar cost average into a winning position. It's weird. It's a weird psychology.
The price too high.
Huh?
The price too high.
That's what you always
think. At $30, then now it's up $75. It's like, damn. This 30 sound better than 75.
But now you look at it like this. You buying a stock, right? Okay, so let's say, for example, let's say you were into GVO a while back, right? And you buying GVO, and GVO was showing you from back here, it's coming down off of this $6 level. People are more comfortable doing a dollar cost average in here versus when it broke above $6 here and then taking profit up here. Because now what happens is on the breakdown, you're hoping for a bounce somewhere. So now you need that bounce to come in. Now you have less likely of a chance because if a company is declining like that, it's probably for a reason, especially on a monthly chart. So now you're looking for a bounce versus playing into the upward momentum and waiting if you see some kind of sideways action or downwards action as your signal to get out. Like that should be more so the way to play it because I understand the dollar cost averaging mindset onto a losing position that you have confidence on that hasn't broken into a downtrend and all these things are in alignment for you. But if you got a losing position that's broken into a downtrend and is broken below your stop out level already, you need to get out that position more likely than not. But more people will dollar cost average into that position versus the position that they're in that hits a take profit level and then they're going to say, you know what? Let me get some more at this 231 level and see how we react between 231 and 291 because they get so scared about this rejection above this level. Now, all you got to do in this case is keep your stop much tighter than you did before because that's going to lock in your profits because you're already in profit. Mm-hmm. Like me and G, we're already in profit right here, right? So now if I dollar cost average in at 231, all I got to do is say, all right, I'm going to tighten up my stop loss. And when I tighten up my stop loss, it's going to lock in whatever amount of profit I could lock in at that price level. But because I'm buying more, if we keep pushing up, now I'm gonna keep benefiting and now every time it hits a support level or resistance level and it breaks it, I'm gonna have more confidence because now I see it broke another level. But all you gotta do is keep tightening up that stop and it keeps you safe in that position. And I feel much better in a position like that than a position that's down 70% and now I'm trying to dollar cost average in to make it down only 30% and hoping that I get a quick bounce that could bring me back above into the green. You understand what I'm saying? It's like backwards hustling almost. So,
That'd be me.
but it's a psychology behind it, and that's what like psychology. That's like a reverse psychology. A lot of people got to break is that you. It's okay to dollar cost average into a going down position only if it hasn't broken certain parameters, like your stop loss, and it hasn't entered a downtrend. Then you could dollar cost average into a position that's down, but you should be much more comfortable dollar cost averaging into your up positions because they're showing you that they have strength and they're getting stronger. So you want to put more money into your strength than your weakness. So that's how I say we got to rock with those long contracts. Long contracts the same way. Like we in a long what do we got long contracts on? We got long contracts on. This is a long contract on GVO, but let's look at another one. Let me pull up the triple Q. This long contract, which is up right now. We got the triple Q contract up 116%. The March calls up 116% for me on the triple Qs. So now I can sit here and say, I'm gonna hold my triple Q position. I got 2 contracts, right? I can say, all right, I'm gonna hold on to my 2 contracts. As long as I haven't hit my take profit already, which I gotta double check. I probably did hit it. I think take profit was 500. But if I haven't hit my take profit already and taking the money out, and I like the momentum, which I kind of like this momentum right here on the Qs, I'm going to say, all right, let me go ahead and dollar cost average in. Let me get a third contract, even though I'm already up 100%. I'm going to buy a third contract, right? Or I may take my profits out and I may buy a contract just using the profits. If you don't want to dollar cost average into your position and you want to lock in your profits as much as you can. That's another way you could play that game. But if you're not going to dollar cost average into the winning position, the dollar cost averaging into the losing position has to be around certain parameters not being broken. And dollar cost averaging into your winning position should be done in a way that's protecting your profits in as much way as possible, whether that be moving up your stop loss or selling the contracts that you got now and buying back in some cheaper contracts that are expire in that same time frame. So you take some money off the table. That's the way I'm going to be coaching people through their option contracts from now on, because outside of that, everything else becomes the gambling. You start gambling. You start playing around with the market too much. And we don't want to be gambling. We're investors.
I'm tired of gambling.
If you want to gamble, I got a nice sports page for you. They got some good call-outs on there. And they always be hitting on the parlays, but I'm not a gambler.
What's up with Microsoft?
Look at the triple Qs just crossed over to the green on the weekly, y'all. You see this now? So now I'm thinking about if we close above this 496 level. Let me check the last call-out levels I put in.
500 calls for next week. I think it's probably pricey too.
Let me see. On the call-out list, that was the call-out, the $500 calls. Let me see.
I'm not sure. I'm just saying, it's about to break 500.
Well, let's look at the call-outs, man. We got the call-out list right here. Let's pull him up. Let's see what we had going on for last week's session. Well, for the last call-outs. All right, so triple Qs, we had a call target of 493.78 and then a call target at 497. So the triple Qs is literally right at the call target we put at 497. That's why this line is purple right here. This was our target line. So we hit target on the triple Q call out. If you took those call outs from when did I put this out? That was on the 30th. September 30th I put out those triple Q calls to get into triple Q weekly contracts. So that means you should have been getting some contracts that were at least 3 months out on triple Q, 3-4 months out. And at that point, I think triple Qs was I had to stop at 480. That means that triple Qs were probably in the 480s around that time. Those contracts will be up nice. So now my question becomes, do I dollar cost average in at 497, take my profit? Because I hit profit. We up 100 and some percent. How I'm going to do it, I'm going to do it the fashion I told you, where I'm going to take my profit out and I'm going to find a smaller contract and use my profit, or maybe even half my profit, to buy those new smaller contracts that expire in March. Because I still want to keep the time. I still want to keep that time of March expiration, because the time is the most crucial thing. So I want to keep those March calls. Right now they cost $500 each. I bought them for $230. So let's see if I could find some March calls that I could find again for around $250. So I'm gonna sell both of these, take out $1,000, and then we're gonna use $500 to re-enter long contracts. So we're taking half the money and re-entering. So now I'm pretty much risk free on this second go around. You understand? But that doesn't mean I'm not gonna put a stop loss in and all that kind of shit. But you still got to do that. But we'll work that out right now. I'm about to take that contract. I'm about to take that profit right now. Put that up in the chat for y'all. The triple Q 565s. Them things came in nice. Alright, we're gonna sell that. Get up out of there. If there's any particular companies y'all want to do levels on this week, let me know. Nvidia, what's up? We back, Nvidia. You see we came back?
That's all I'm doing is seeing. I ain't entering nothing.
You ain't entered? Nah, don't tell me you ain't been in there. Nah, don't tell me that lie.
Y'all Florida hurricane slowed up my deposit.
Oh, the banks did you dirty. They didn't want you to win.
No, they didn't.
That's crazy.
And now I'm looking like I'm gonna jump in now, but no, you need to wait for a pullback.
Yeah, for you, if you don't have any position right now. Oh man, all right. I think we're gonna get you in those Nvidia levels. We got you. I got you. We're gonna get that right.
I don't know where I was when the video was at 134, but I missed my opportunity right there.
Yep. Nah, real opportunity. As soon as it touched 130 again, you were supposed to be back there. As soon as we got back above 130, you were supposed to be jumping back in there.
I gotta learn to leave my trades there. Once shit hit red, I be ready to pull my profits, pull whatever. I don't let my trades sit long enough, even when I got the time on the contract.
I was gonna say that's why we like to buy time, because you don't want to get into that pressure moment. Because it makes sense to do that if your contract expires next week. But if you got a contract that don't expire for 2 months, you could work with that some more. Where the hell is
They got AMD after that too.
All right, hold on, I got y'all.
Microsoft gotta hold itself right here, man.
Microsoft gotta pull it together.
It look like it's gonna go back to the 416 again, boy.
That's what I said. Microsoft gotta pull it together. I don't know what Microsoft got going on.
Right. This 420 is a crazy level, kid.
All right, so we definitely said we're gonna do Nvidia. We're gonna redo Nvidia levels. On September 30th, I put the call out there to jump in Nvidia. The call entry level was 121 at that point on September 30th. You're supposed to enter Nvidia at 121 and had the weekly contracts. Yeah, you're supposed to enter Nvidia at 121, had the weekly contracts, and then your call target was 123 and then 124. So when I put weekly contracts, like I said, weekly contracts means 1 to 4 months out in expiration. So that would have paid. Those contracts was paying right there. But we're going to catch them this time. Don't worry. We're going to catch them this time. So I'm just going to readjust these levels, get rid of these, because NVIDIA's in a whole new stratosphere now. And y'all said AMD too you want to do?
Yeah.
All right, got you. AMD, we'll do AMD. I want to see how this Qualcomm call out played out. Because remember we called out Qualcomm? Who put that? Who asked for that? Somebody asked for that.
I think, was it? I think I did.
You asked for Qualcomm, didn't you? Yeah. Yeah, we asked for Qualcomm last week. All right, Qualcomm ain't really do nothing, but Qualcomm is still near entry. Qualcomm call entry 175. So if we get a break above 175.80, that Qualcomm play is still in effect. It could still be in effect if you want it to be. I was wondering, I'm like, what the hell I put Qualcomm on this list for? But I remember now, Qualcomm. All right, and then we got that's crazy. I had Coin on this list too. The Coinbase entry on the September 30th, I had Coinbase entry at 175. And the call target, the first call target was 186. The second call target 196. So it hit target 1. It's on its way to target 2 right now.
Yeah, that shit would have went up stupid.
I'm in those long coin calls still, boy. I didn't dollar cost average in. I should have dollar cost average in.
Right.
But they don't expire till January, so we good on those. I'm not no pressure. We got 7 contracts on them boys. I went hard on Coinbase. I ain't gonna lie.
Shit, just like I did on the video.
Yeah, that Coinbase is doing.
Right now, it's over 190.
That's why I was laughing because I was looking at the contracts moving. Like them things is moving right now, boy. We was up 22% earlier. Now we up 44. I'll take it. I'll take it, boy. Those January contracts ain't even too crazy either. Still, the January Coinbase $400 calls. I got them for around. They got them around 150. They only 200 right now. $200, and they expire in January. And them contracts are moving right now. But we'll see. Let's see. I'm just gonna hold what I got. I'm not gonna add any more contracts. I'm just gonna hold that position down till we hit the second target. All right, so let's start off with NVIDIA. Let's start off with charting some NVIDIA.
The KFC on 119. Yep.
All right.
Yeah. What is that?
Oh, my Discord way over here.
No, I'm on Zoom. I'm on the call too.
Who said that?
How's it going?
I see my guy Tim in here. Oh, who's that? Is that Tim? Tim, what's good, man? I didn't even see you was in here, brother. That's my cousin, man. We got the same last name. We definitely related. All right, NVIDIA. Let's let go. Hey, G, remember the... yo, look at those charts. I remember we were drawing those downtrend and uptrend lines. All right, so remember that intersection point I was telling you about? I said they intersecting right here. The downtrend was intersecting with the uptrend that I had, the most recent uptrend, and this was the breakout point. It was either going to break down right here on the 30th or it was going to take off, and that shit took off.
I'm driving. Where was that at? Around 126, 127, right?
That was around, like around 125. Yeah, right in that 125 range, 124.
That's the trend line. That's why I'm the last one to break that trend line out of all them boys.
Yeah, they was. Oh. And that's what you want to look for when you in certain positions that's going to support your momentum or give you confirmation that you need to get the hell out of a position that's breaking down. Like right here, this NVIDIA broke down and stayed in the downtrend that this line was showing. I would have sold my NVIDIA contracts. I would have had to get the hell out because
I was in NVIDIA calls last week.
Yeah, that shit would have showed a breakdown. But anyways. Let's go back to.
That's why I dollar cost average heavy on it.
Oh,
this week contract.
Oh, you did? Oh, so you came up then?
Yeah, I got like 21 contracts.
Beautiful, beautiful. Did they bounce back into the green for you?
Yeah, it bounced back.
Okay. That's what I want to hear. All right.
I'm waiting.
So
I'm still on dollar cost average.
when do you got expiration on those?
This week on the 18th.
Get out of them joints, boy. Get out of them joints. Stop. Don't play with that contract no more. If you got your money back, get up out of there. Let's get some more time. Buy some time back.
That thing was gonna break that 140 level. That 140 level is gonna be nice.
Yeah, but you could still get that on a contract to give you a little more time. Them drinks that expire this week, that volatility could get crazy. So I would take profit on that wherever you are.
I noticed my bread didn't get settled for this week. I'm about to call Robin Hood to see what's going on, man.
Tell him the hurricane wasn't that bad. God,
right.
Yo, who's that?
Tim,
my brother, what's good, man?
My fault, man. I'm on the road.
Nah, you good. You good.
I'm still trade, boy.
Brian and this guy. Yeah, what'd he say?
I didn't know you still trade.
Yeah, I don't be trading as aggressive as I used to, but I still be looking in the market, trying to keep up with the economy and shit.
I feel you. Listen, man. You know we here whenever you're ready. You know I'm here whenever you're ready to come back. You know I got the levels for you.
Oh yeah.
That nigga name is new name is Parlay Tim.
Parlay Tim, boy. Bro, Tim be hitting the parlays, boy. Tim said I'm out on the road.
Back over here.
Yeah, bring it back on this side. Bring it back to the stocks. Bring it back to some long-term stock holdings, man. Our parlays winnings, bring those back to the market.
I don't do the parlays. I do a little one team.
It's be too quick.
Y'all trading today, y'all just looking at levels, like price average.
Today is just charting day. I'm just doing my levels today. I'm not trading really like that today. I'm managing the positions I'm already in and then setting levels for the weeks coming up.
Oh, okay.
So, if we could get a pullback on Nvidia to 135, 135.50, I would see jumping in there. That might be the pullback you're looking for, Goddess, on Nvidia. And if you get in at 135.50 though, your take profit one will be this 138 level, kind of where we are right now. And then your second take profit level, we're going to mark that up right at the top of that all-time high right over there at 140.63. So that would be target 2. And target 1, we can make it this 138 level. And the entry would be 135. And then on the put side, because we always gotta play it both ways. We don't love no one direction. The market could go any way, anytime, and these levels are gonna let you know when it's time to jump on that position. On the downside, we will look for it to break below. I like this level right here. If it gets below this 130.90 level, 130.90 could be put entry. Yeah, 130.90 put entry with first target on the put. We'll make the first target 129.40. And then the second target line, I would look for this. Where is it at? 127.58. So we got 129.40 as target 1 on the put, going down 127.58. Second target. On the upside, 135 call entry. 138.17 target 1. And then target 2, 140.63 is going to be target 2 on the calls if we enter those calls. If you enter the call at 135.50 and we have a pullback, it continues to pull back, you would stop out of that call, get out of that call by the time we touch. I will honestly be out once we get, if we break below 133.80. 133.80 is going to be the stop on those calls. 133.80, 133.90.
Darling, weekly calls for NVIDIA?
Yeah. Yep. Weekly calls or puts. Either way, depending on whichever price level we get activated first. So if we're having a pullback, right? If we're having a pullback, hold on, let me see. The stop on the put, if we get in that put at 130.90, I would want you to stop out the put by 132.40.
Okay.
So now if we get a pullback and we get to that 135.50 pretty aggressively, because you see we gapped up from there, so it may refill that gap. If we get to that, if we gap down aggressively, I would monitor it around 135.50 and see where it closes on the day. If it closes on the day still above 135.50, then I will be comfortable entering those calls. But if on that pullback, if we close below 135.50 on that day, I will wait it out. I will wait for a second and see what happens in this little range right here between 132 and 135, because it could bounce around in here for a little bit before it takes off again, and we just got to wait for it to break back above 135 and close there on the daily for confirmation, or it's going to break down, it's going to come and retest this 130. And if it retests that 130, then of course we want to wait for the daily to close below 130.90, and then we'll enter that put. And on the put side, on these contracts, honestly, because of this being all-time highs and playing around there all-time highs, I'm going to change these from being weekly contracts on NVIDIA. These will be daily contracts. So this, you want to get something, when these levels trigger, you want to get something that expires probably like 3 weeks out in expiration, 2 to 3 weeks out. You don't have to go 2-3 months out on this one, unless you really want to hold NVIDIA long-term calls, because we don't know after this 140 where it could go. You understand? It was all-time high. It could go crazy from there. It could go 155, 160. I personally anticipate 155 by the end of the year, but that's only with certain levels being broken. So I'm just watching for those levels. I already have shares, but as far as coming playing option contracts, yeah, I'm just going to watch for those levels. If you want to get in buy shares and buy long-term shares of NVIDIA, I will wait until we retest this 130 area. I will start buying more shares down there. Or if you don't have any shares, start buying your shares when we retest 130 again. Because I don't think we're going to stay. I don't think it's going to stay down there much longer. Once it goes back down and bounces again, I don't think NVIDIA is going to be revisiting 130 until the whole market has this big pullback again. But let me see something. So that's NVIDIA. Those NVIDIA levels. We want to do AMD next. Let's rock with AMD. We'll do AMD and NVIDIA for the free session for everybody that's live on Twitter and YouTube. But then after that, we going private. Got to become a member, get these exclusive levels. But, you know, y'all can make something work with AMD and NVIDIA. Y'all can make some money with us. Let me see something. Someone type something in the Discord. Yeah. There you go, taking notes. There you go, Goddess. I see you getting the notes in. Yeah. So now you know what you gotta do, right? On those entries, you gotta set alerts.
Yeah.
You gotta set alerts on your entries, because that's the only way you're gonna catch them.
That's the only way I'm gonna catch them.
It's the only way. You know, that's the only way I catch them half the time. I be like, oh shit, alert's going off. I gotta get in this position, because you never know when it's gonna happen. You never know when these levels are gonna hit. So you gotta set your alerts. You gotta set the alerts on those price levels, on the entry for puts and the entry for calls. Set the alerts. And put it on not just a one-time alert, put it on continuous alert, so that every time it touches that level, it alerts you. Because that was a mistake I made. I put it on this one-time alert, and I got the alert, but it only hit once. I need that thing to keep going. Anytime it touches the level, I want it to alert me. Now, AMD's in a little more interesting situation. We got a little more room to run to the upside. AMD is crossing to the downside on the daily chart. It looks like it's peaking out on the weekly. So we want to see how this week goes for AMD. It's going to be a big signal if it's going to push up or start breaking down. Oh, shit. Hold on. Let me see something. Okay. My mic is working. Okay, I was about to say, ooh. Sometimes I be plugging this mic in and it's not working. And I be streaming and there's no sound. I having to double check. But, all right. So AMD. and Dizzle. Let's see what they got going on. AMD, we got AMD. I would take call entry on AMD if it shows that it could get above and hold above 169.30. That's going to be my entry for AMD. 169.30. That's going to be the call entry. And then we'll say take profit target 1. We'll make 172. 172.70. And call target number 2. Where's this level based off of? Get rid of that. The next target I see right after that will jump up to, I guess you can do 174. But I like AMD to push if it breaks above that level. So we're going to say AMD to 179.72. So that's a strong gap up push. Let me see. So first take profit, we're going to adjust that to 173.16 on AMD. Based off of this wick back here, back in May. Yeah, May 20th of 2024, that weekly candlestick wick, that's a take profit level right there we're going to use. And it touches again here in July. So you got a wick touching here on a weekly candlestick and a wick touching here on a weekly candlestick, and then also cuts through this wick on May 24th. I mean on May 28th. So you got 3 touches on this weekly level, which is why I set that as a take profit, as the first take profit level. And then on the second level, we see if we go further back, because sometimes you gotta go further and further back to find those resistance levels. So if we go back to February of 2024, you see that 179.50 level that I'm seeing on the wicks, where it kept wicking out. It wicked out over in that area 1, 2, 3 times. Wicked out for 3 weeks from the end of January and pretty much all through February. It wicked off that level of 179.70. So that's going to be heavy resistance. So I really want to get out and take profit right there. And these AMD contracts, if you enter these AMD contracts, you're going to enter it based off of it being, I want these to be weekly contracts. So you're going to have to go a little far out with these. You're going to have to spend a little money, but that security is going to be worth it, trust me. And then the stop out, if we enter this call right here on AMD, if we enter at 169, and it's going to be a weekly contract, we're going to keep the stop short and sweet. We'll be out if that thing starts closing below. We'll stop out right here. 165.47. Yeah, 165.47 will be the ultimate stop out. And remember, these stops, because we're doing because we're doing weekly contracts that are going to be 1 to 4 months out, I'm going to have to come back, and as the positions move, we're going to adjust these stops, because the stops have to trail up along with the theta and along with the price. So when you jump in the option contract, everybody, well, I'm not going to say everybody, there's something called theta, and theta is the time decay on option contracts. So if we enter these option contracts now, or as soon as we break above 169, let's say it breaks above this week, as the weeks go on, if we get a contract that expires 3 months out, every week or so, we want to reanalyze our stop. So every week, based on the theta and where the price is, we got to readjust our stop loss. And that's what a lot of people don't do, and that's how their contracts end up eating them up. Because they'll keep their stop at the original level of 165.47 when they first entered. And then 1 week will go past, 2 weeks, 3 weeks, 4 weeks, 5. And yeah, they got a contract that expires 4 months out, 5 months out. But you got to remember, every single day, theta eats your contract. Without fail, you're going to lose money on your contract every day from theta. It's going to take that money. They're taking their money with theta. So if the contract starts going sideways, if the price starts going sideways at any point in those 3-4 months you're holding it, that theta starts chomping away. And then people be like, oh, well, my contract going down. And then you need some ridiculous push that's past your original take profit, and you're going to need something like 186 to come in the profit. And it's going to be like, damn, I should have just took my profit when I first had that 30%, based on the levels. But you didn't have the trailing stop. You didn't put that stop up. So you just kept leaving the stop at 165 instead of moving it up to 169. So that's how I do it a lot of times. I move it up to entry. So 169.30 is the entry. I'll move my stop up to there first. Once we're in profit, once we break first target, all right, so now the stop loss becomes entry. All right, once we break first target and it's pushing up, all right, stop loss now becomes what the first target was, and so on and so forth. And you just keep trailing it up as the time goes on. And there's a little sweet science to that, but that's why it takes practice, training, and community really to make this stuff profitable for you. But let me see, AMD puts, because like I said, we don't love them no one way. AMD, we got the call levels. Now for puts, we're going to look to the downside. We'll say a good put entry looks like it would be right around this. Yeah, right here. It's 161.92 level. Looks like a good put entry. You got that based off the weekly wick back here on April 8th, 2024. The bottom of that wick, it touches there. It touches the top of the wick of April 29th. It goes through all these little wicks that it wicked through right here and little bodies. But then it also has a top wick right here that it has from August 19th. It touched the wick there on that level, and it resisted and came all the way back down. And then it also shows a support bounce right here off of that 160-190 level, where it bounced back up from 160-190. So if we get a daily close below 160-190, we will enter AMD puts. First target on the AMD put would be 160.07, pretty short. And then you got the next put level down here. So I got this first level based off of this wick right here. I based it off of that weekly wick as far as the take profit, that 160.07. So I just did it based off this weekly wick. And then the second one, the second closest wick down would be this wick right here at 158.88 as the second target. And after that, I probably wouldn't mess around with it too much if it gets down to 157. 157 would be like ultimate take profit level on that put that we got in at 161. And then reevaluate from there. But those are those put levels. So let me type that in. 161, 161.92 entry on puts. 160.07 target 1. And then we got 158.88 target 2. Now, I'm not gonna lie. Honestly, I love playing the market more to the upside than the downside because the market is in a general, especially if you're trading more blue chip companies and strong companies, it's generally more so in the uptrend than downtrend. But you can make good money off of those sharp, small pullbacks. So my pullback contract, honestly, I don't like buying puts that's like months and months out. Anytime I'm playing puts, I'm usually playing them within a daily contract range within like 4 weeks because I expect the pullback to be sharp and I expect to take profit pretty quick. I don't expect to stay in the put for over 2 months. So a lot of the times when it comes to these put levels, the call levels may be weekly contracts, but the put levels a lot of the times are going to be daily contracts. So just keep that in mind. Unless I specifically say, like, this is a put we're going to hold for like 6 months because I see something crazy happening in the market. But those are the levels for AMD and the stop loss on AMD puts. If you're getting at 161.90, we don't want to be in that put if it gets back above. Let's go back. We may have to go back further because there's nothing but wicks right here. Hold on. Okay, yeah, right here. This is a good level. We don't want to stay in that if it gets past 164.14 would be the stop on that put. And that's from the weekly level going all the way back to January of 2024. That was the bottom wick area. It kept bottom wicking off of 164, kept bouncing up off of it. So in that put, if we get above 164.14 after entering pretty much at 162, then we got to get out. We got to get out of there. That's a stop loss on the put. Don't want to play around with it. So for that, I'm going to put weekly contract / daily put contracts. All right. So we knocked out NVIDIA and we did some AMD. That's for the free for the people charting session this week. Hope y'all got some good, information out of that and able to chart your levels, set your alerts, and understand why I even made those levels. But we got to go into a private session now for the people. We're going to set up the rest of these price levels for the week. The big boy plays like Coinbase. I'm coming back to Carvana, y'all. That's just a gem for free for everybody. We coming back to Carvana. I missed too much of that wave. And Carvana was a 1 year call out. I put them in the short term holdings list to hold them for a year. And I did that at the beginning of this year. And they've been having a crazy year. I should have held them much longer than I did. But we're going to get back to them. I think I called Carvana out. They were like $80. They're at $192 right now. Yeah, exactly. That's what I said. Like, they had a wild year. I think I sold them around like $130 and I thought I did something. Carvana said, oh, okay, you must not know. We taking off, boy. But, yeah, we're going to do levels on them. Make sure if you don't go to landofculture.com, check out the shirts. Got stock shirts on the website. That's where I got this shirt from. I'll put the link. I'll put that link in right now. Hold on. It says men lie, women lie, but my price levels don't. Okay. I'm going to put that link up right now for everybody. On the Twitter and the YouTube. Oh, I can't do it on Twitter? Don't worry, I'll put it on Twitter afterwards. But appreciate everybody who came through. Hope I helped you out with some levels today. And I will see everybody for next week's charting session. We're going to be going live trading throughout the week. So tap into those live trading sessions when we put these plays into action. And be prepared for next week's charting session. Bring some questions.